Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Wednesday, the 28th of May, 2025. Well, after the market, we saw Nvidia, Salesforce come out, other companies too, but those are the two big boys that I saw coming out after the market. And both did beats on their earnings, and their guidance still looks pretty good. And what you've got is a market up because of that, about 175 points in the Nasdaq, 100 in the Dow, 33 in the S&P, and they're dragging the Russell along with it up 4 points. The metal market's down a little bit. Interest rates have been looking as though they don't want to give up much of this current yield that they have, and that's problematic. Japan did their 40-year auction. It did not go well. So that means they're going to switch gears most likely and start playing with the front end of the market, and they'll issue more debt at that part of it. But this probably sets the bank up and looking at it to spur the economy on again. I know Bank of Mexico came out today with their forward guidance, and it certainly looks like they're going to have to do that. They're cutting dramatically their growth numbers as they see the tariff creating problems and things just slowing down for them. Yet these software companies, they're just not seeing that. So it's a tale of two different worlds, very, very much so, and you've got to pay attention there. Speaking of that, you're going to get the second look at the first quarter GDP tomorrow. The market's expecting it to contract by about 0.3%. Weekly jobless claims, they're looking for an increase of about 1,000 to 228. The Richmond Fed President Barkin will be host and participate in a housing partnership network at 7:30 in the morning. So we'll hear something about that a little later in the day, I hope. National Association of Realtors pending home sales at 9, natural gas storage numbers at 9:30, and we will be getting also the EIA numbers on regular oil stocks, where they're at, and that's because of the Memorial Day holiday. Nvidia beat most numbers right now. I don't know where it'll be later tonight. It's up near $5. Salesforce is up near $3. Both of those CEOs of those companies got interviewed. Actually, as I'm talking to you, I'm recording it, but they're being interviewed by Kramer to see what he's saying about them and where they think they're going, and we'll find that all out. Should be very interesting. So let's go together and take a look at the chart action and see what we've got. When you look at the S&P, it's sitting right here. It's over the 18-week average of closes, so the bias is up on the chart. The last highs were up here. It's not far away. We'll see if the market can mount an attack on it, or if interest rates stop this market, or something the president, and I'm talking President Trump, does to upset the apple cart again. I was reading an article literally in Bloomberg. It could not have been 10 minutes ago. And it talks just what I saw. They call it the taco trade. And it's based off what Trump does and the action he takes, and traders going the other way, because as I spotted a trade, and I didn't know about that they even called it a taco trade, and I started laughing when I read it. But it's all about the president threatening, going one way, and in very short order reversing course, and traders are stepping in on dips because they're very bullish still, the stock market, and they're buying the breaks, looking for the market to rally. One of these times I've seen these events, they don't come back, but I'm not saying it's not the thing to do. It's been the right thing to do recently. You can see how the S&P has been coming up here on the daily chart. We don't have a trend. I say this market's now wobbling. You have a higher high, lower low. It doesn't mean it can't take off. The all-time high for the S&P is right here at 62.36. You're not far from it, but that doesn't mean you're going there. When I look at where the moving averages are, well, the market is doing its darn best to fight to stay over them, and that's a good thing because that means the support is under them. If the market got under them, you really don't have support until you get to a Bollinger Band. So I'm not looking for that. Another bullish event happened today. Notice the red line, and it got over the 100-day average. Now, a lot of stock traders use a 20 and a 100. I like the 18 better with this. And that's typically a bullish event for moving averages. Add to that, you're overbought. So I see an overbought market that has upside bias. In terms of what the swing line is doing, there's no trend. When I look at the Nasdaq, it's the same chart pattern, but with a very pronounced difference. Let's take a look at what the slow stochastics are doing in this market. And I want to get back here to where the market comes right here. Notice you get a 76 reading after sideways action. But the very next day, the market comes back and both numbers close over 85. So the market re-embeds, which means if it can hold on, you have an objective of the upper Bollinger Band if the market can mount anything. This is where you're at right now. This was called a bear trap. I explain it in my enhanced Bollinger Band course for those of you that have taken it or considering taking it. It's under the word courses at iraepstein.com. It'll stick with you. I'm really convinced of that. When we look at the Dow, you have a higher high, lower low. So all the main averages, they got over the 18-day average. From April 7th, you know, it was nonstop rally. Then they pulled back, in most cases, went to the 18-day average, and they're trying to figure out right now, do they have the power to just slice through everything, or is this going to be a toppy area? Again, in this market, this is that all-time high, and in this market, it's what, the 46,000 level, 46,003. So we'll find out. In the Russell, I didn't even bother putting the number way up there because it doesn't mean anything to me. This market, I'm going to repeat, the laggard. Laggard doesn't mean I'm saying go short. What I'm saying is when you get short signals, the first one I typically go for is the one that's the weakest. This is the laggard in the market. It could become a leader if and when interest rates fall. But until interest rates start a meaningful decline, not a short spree after you get up to, let's say, 5% and then you drop back to 4.7, that's not a break in the market. 5 to 4, under 4, would be a break in the market that I'd look at. That would make this market come alive. But getting a half a point, quarter point breaks, that's not enough for me. I see a lot of resistance in the market up here. The market has bias up because it's over the 18-day average, but any close under 2065 is bearish this market since the swing line's already down, assuming, keyword, that you don't take out Wednesday's high, which is today's high. We're already looking at Thursday trade, remember that. In the DAX, each time you've been going up to the Bollinger Band, you're getting hit. That's where I think the pros are taking some money off the table. That's what I teach in that enhanced Bollinger Band course. Then we get to the 10-year notes. Visually to me, this is a bear market rally into the 18-day average, finding support at the 100. Eventually it has to decide, can it get up and over and close over the 100 to get a trend going to the upside on the futures, or does it break from here and start attacking this 109 level again? You're going to know that fairly soon. And in the 2-year note, you can see it tried that. It's starting to break down. Be careful here. If this market embeds, you got a problem and you're going lower then. Which market does the Fed typically impact the most? The 2-year. But when you go down, what does that do? Does that mean higher and lower rates? Interesting. Then we get to the dollar index, which today, as you can see, got down. Yesterday, let me repeat that. I said it wrong. Yesterday got down to the Bollinger Band, and that's where I think the pros were taking money off the table. And now the resistance is the 18-day average. But to get there, you got to be careful because that means to get to this number, you got to take out the last rally high. That's problematic. That could mean that you're ending a small downtrend. Always pay attention. Is that changing everything around on you? In the euro, you got overbought. You're pulling back. Support is the 18-day average. You don't want to take out the low over here. Notice where this rally stopped, at that upper Bollinger Band as well. British pound, same story. Overbought, stopped there, pulling back. Does not mean these trends are over. They got ahead of themselves, and now they got to pull back and especially get rid of the overbought conditions or decide to either re-embed. Bitcoin, today was an exit day for me. Let me show you. What did you do on the close? 75. You're under 79 for the first time since you embedded. Bye, bye, Miss American Pie. I'll let the other traders want to own it. The odds, the way that I teach charting, are we're going back to wherever the 18-day average is before you get to 111,000 and 230. And I'm not telling you to go short. I'm saying, no, I don't want to be long. Very big difference there that I'm saying. Let's go to now the August Brent. The July's now moving away. Traders are going to move to the August on you. Momentum is down. Battleground, the 18-day average. You have a higher high and a lower low, just sort of drifting around on you. July crude oil you can stay with. That's the WTI, and it's fine right here. You still have, that's where the traders are. Higher high. Notice where it peaked. Need I tell you the importance of that enhanced Bollinger Band course? Higher high, lower low, and you see how the market's drifting to the downside. I don't see anything there. Gasoline keeps fighting a battle. The one thing I told you as we got back from Memorial Day, and that was 2 days ago, said you don't want to press the long side now that you're through with that. The traders come out. They do it late. They don't understand, a lot of these people, that you make your play before Memorial Day and you try not to come out the day after, all right? You've got the bullish news out of the market, and when you do that, you're often late. Natural gas. What's weighing on natural gas is we're not getting heat through the center of the country. That's one of the things, or the eastern upper part of the country. I don't go by what's going on in Phoenix and Texas where it's always hot. I look for the areas where Chicago's running, just to give you an idea, and we've been running this now for a week, about 15 degrees under normal. Well, as we are, you get warmer when you go further south than Chicago, but it's not heat. It's not severe heat. I don't hear anyone saying the corn, soybean crops in the Midwest is in trouble in terms of weather. It'll come. Mother Nature doesn't make it easy, but it's not there right now, and that's weighing on the markets as there's not that demand for air conditioners and the like. We'll see how far it can go. You're already oversold. This is the first move back underneath the 100-day average. The Bollinger Band, the 345 area, is the next stopping spot if it wants to go that low. So I thought it would fail right up here at the 18-day average of closes today. Told my clients where to go into it, and they've already taken something off the table against, of course, that 200-day average in a window envelope. That doesn't mean I'm always right. Believe me, I am the original Mr. Swiss cheese of how often I'll get things wrong. I was wrong with the Mexican peso today. I was happy. It was a very, very minor loss, but that's what trading is. You got to leave your ego at home. And there's a difference between investing and trading, all right? I do believe in investing. If you watch me on the spiders, you'll keep trades like you are now, 1.5 years on the books. I'm already in Nvidia that long if the traders followed it. I can't tell you if they traded it and followed it or not because we don't manage money. But I can tell you what I said, and that part we prove because every single day we review open positions, not track records. Open positions until they're closed. And that's what we do in the morning subscriber videos. So I do hope you take out the time and want to join us on some of those. In the meantime, what these markets are offering right now are in and out between Bollinger Bands, key moving averages. Pivot points is another way to look at it. And in these pivot points, what you have is a formula. You probably have it on your charting software. And in that formula, you plot it on the chart. You're looking for resistance points above the market, support below the market. It'll look like that on your charting software. I teach you in my video course, and it's free, how to set that up. And then I use slow stochastics with it. So you can decide if this makes sense to you or not. And it gives you a pretty good example of how I teach. So if you'd like to get this, it's free. It's a 3-part video series. Just go to IraEpstein.com, free offers, look for pivot points, choose it from there. I'm Ira. You have yourself a great day, and I'll catch up with you all tomorrow morning or in my other videos tonight. Have a great evening.